Good morning, everybody. Welcome to another day of Mark Report brought to you by Mike Bjork. Today is Thursday, and it's February 26th. Hey, we got a lot of economic news to go over today, so we're going to jump right into it. But first, there's going to be some big changes going on with reverse mortgages, so stay tuned after in there. On the calendar today, we got the weekly jobless claims. We had 282,000 people apply for unemployment last week. Forecast for this week is supposed to bump up to 290 and actually exceeded that to 313,000. So exceeded that 300,000 people threshold, people applying for unemployment. That seems to be kind of the magic number and seems to be kind of growing again. So that's something of a little bit of a concern. Consumer Price Index, we had a negative 0.3% increase in December, and the forecast for January was at negative 0.7, and it reached the forecast. So that's not really good because obviously that's showing the opposite of deflation there. But a lot of that is due to the huge drops we were seeing in the price of oil. Now, when you strip out food and energy, we had the core CPI, and that one actually went upwards. So if you strip the volatility of that, and this is really what the Fed really looks at to gauge in terms of where inflation is heading, is the core. And we had a 0.1 back in December, forecast at 0.1. We actually doubled that up at 0.2% in January, so a little bit higher in terms of inflation when you strip out the volatility of food and energy. Durable goods orders for the month of January, we had a negative back in December at negative 3.7. Forecast for January is supposed to go up only 0.5%, and it actually exceeded that by up to 2.8. So this is good news right here at 2.8. And then we got the FHFA home price index for the month in December. So November we had 5.2% year-over-year growth, and in December that went up at 5.4 year-over-year growth. So mixed bag of news here. Weekly jobless claims not so good. The headline number for consumer price CPI didn't look so good, but the core CPI we need to get a little bit higher inflation, so that was decent, 0.2 numbers. And then durable goods and FHFA home price, all decent numbers right there. Currently, stock market's down. It's pulled back. Didn't like so much some of those numbers, especially the headline CPI, and then the jobless claims didn't like so much. Janet Yellen basically just reiterated what she said day one yesterday in her speech, her second day of speech. So it's basically almost like a repeat of it, just kind of reinforced what she was talking about. The bond market, we're basically the same as where we left off yesterday. We did have pricing for the better yesterday, so that was nice. So we have pricing should be the same as where we left off yesterday. So at 101.30 is where we are at with that level. As we've talked about regards to the reverse mortgages coming in March, which is going to be extended another 30-60 days. The HUD came out with a new rule where basically for qualification purposes, a borrower that was applying for reverse mortgages is going to have to qualify based on income as well as credit. So here's the catch here on those. Now, they're not the end all. You may miss on one, and you may have other compensating factors that may get the loan approved. But what they're looking at credit-wise, they're looking at willingness to pay. So if you have the funds, are you paying your stuff like your tax, any issues with tax liens or judgments, these type of things. So they're looking at those on the credit report. On the income side of things, they want to make sure that you have residual income, meaning that the money you have every month coming in, are you able to support those payments, housing payments like your taxes, your insurance, and if you got HOAs, if that's applicable. They want to make sure that you have the ability to make those payments every single month. So those are things that they're looking at. Looking forward, will be required on all HECM reverse mortgages going forward. So stay tuned. But otherwise, today we got the rates are improved, or at least about the same where we left off yesterday. So thanks for watching, folks. So hope you guys have a wonderful day. We'll look forward to seeing you guys tomorrow. Take care.